The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Hi everyone, Basil Chapman here, sitting in for Steve Rhodes' hour. And of course, I couldn't do the same thing as Steve. Steve does something very special. If you can give me 1 second here, I just need to put in something. There it is. Okay. So we're looking at a little bit of an attempt at some kind of a rally right now in the general market. It's going to be very important that by this afternoon, you see a lot better action in the different sectors. Why? Because the selling intensity, on the one hand, while it was emotional, was technically something that needs to be corrected very quickly. And when I say very quickly, I mean probably today or tomorrow. You need to see some very good upside action with the market essentially saying, I've survived this for the moment. There's a chance we can use whatever excuse we want. We can say that the chances are that the Fed is going to lower rates. I don't care what they say, but whatever it is, the market has to take it as at least a sign of some kind of acknowledgement that the overall market has gone through a very difficult couple of weeks and that there's a bit of a relief here. And then we can assess, hopefully from higher prices. That's really important. When I say higher prices, I mean for the prices of the, how can I put it? For the S&P, the Dow, the QQQ, which actually is holding much better today than the Dow certainly, and the IWM Russell 2000, it's really important that they start a move that says, I'm breaking away from all the lows that I've been making. I'm trying to establish a decent base, a base from which we can actually consider a decent rally, even if it's just 3-4 days. We need that relief rally. And I think the general public, and I think the Fed might even be looking at it as well, to say, the public, they've gone through the financial crisis, we need to do at least something. We need to at least make sure that within the context of the investor psychology, that we're looking at an amelioration of all the downside, this terrible activity. All right, if you're looking at downside activity, look at the crude oil. Crude oil has gone, there's a rectangle formation that I always like to look at if it shows itself, and it did in the crude oil with the low that was made back in November. It was the week of the 4th of December at 70.63 in the continuous contract. It ran all the way to January 27th, week of the 27th high of 82.88. And now it's taken out that low. I have a technique that I call Chapman Wave Dreaded H formation, meaning that if, where can I go? There I can go, okay. That if, let's move it that way. There's a sharp move down, and then there's a rally, and that rally fails in the first or second highest peak, in a peak A or B, and then takes out that left side low. It has 2, maybe 3 bars in which to close above that left side low to say, whew, at least I'm trying to get back into that norm that I was in for many weeks. If it can't do that, that's very negative. So yes, crude oil is an international commodity, and it's saying, didn't do very well. I'm making lower lows. We had that spectacular move back in what was it, June of 22, and now we are pulling back very sharply. This says internationally, you've got this pattern I call the dreaded H, and that says we've already done the H goes to a lowercase m in the daily chart, plunges almost like a 1-to-1 to the downside, and that just says crude oil is one good sign in the general market, but it is also a sign that harbingers the implicit, the implication that the general economy worldwide is starting to fade. If you look at wood, the iShares Global and Timber Forestry ETF, making the H pattern as well, but it hasn't taken out the left side low, but it is weakening quite a bit at 175. WOOD is the symbol, Global Timber and Forestry ETF. And that's made a peak E in the weekly, which says you've got a little bit more veracity to the upside, but be careful because you could be looking at a break at 69.75. If it takes out 65, then it's going to probably retest that low of 63.78 made in September. If you're looking at high-grade copper is pretty much saying the same thing. Weak international action. The daily has gone below. There's an H pattern failed once, twice, three times, and now the price has gone under the 200-period moving average of 3.92, and it's a peak E in the weekly chart, and it's under the 14-period moving average in the weekly, but the 9 is still over the 14, which is a good sign. So that says copper is, if you look at the weekly chart, is in a consolidation phase, but it's starting to make lower lows and lower highs, and that's a concern. Let me just do this real quickly. I did this in the update. So the Dow's way off the low, not way off the low, it's off the low. It's only down 476 at 31,676. And the low today was 31,516. So this is a good start. Now, one of the things that we did for my subscribers to my opening call, that's my newsletter. We raised a lot of cash and we're using a small amount to do some trading. And the trade today was to buy the 3 times long Dow on a dip below a certain number. Well, we got that, and that so far is a little bit higher than when we entered. Oh, the day is so young you can't even talk about it as being successful. It is not even success. It's an attempt at trying to get some kind of a low that's being established that allows at least a decent bounce. So I'll go over the S&P, which has not made a lower low than 3 days ago. It's off the low. It's at 38.69, down 50. With a low of 38.44. That's a good sign. Let's see. We want to look at the QQQ. Now look at this. The QQQ is only down $1.60 at 295, down 0.61%, and the Dow and the S&P are 1.5 and 1.3% specifically down. So this is a good sign. It's trying to get into this right here. Look, it's trying to break out of this Chapman wave inside track repellent zone. This is the falling axe formation, lower highs and much lower lows. Eventually it tries to form a base, and that can make a cup formation or a V-shaped formation, and that's what you want to monitor, because if it is able to start to close above this trend line resistance, that's going to be a big deal. Now the next thing we're looking, so the QQQ, NDX 100, Invesco Trust Series, doing not much better. And you're looking at the IWM, still very weak. Oh, it's at the high of the day almost, but it's still very weak at minus 348, down to $173 at 173. Just as we're about to go to the break, let me show you gold. Gold is up $17 at 1928, and silver, so gold is up 0.89%, silver's down 0.07%. They always have a trouble. Look, that 200-period exponential moving average resistance right there for silver. It's in place. I'll be back in a moment.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. Basil Chapman sitting in for Steve Rhodes this hour, and we're looking at this blue line. I'll do this for those of you who didn't hear my show. I discussed this as a midpoint in the long rectangle formation. I don't want to go through the whole litany of what we do in the Chapman Wave methodology when there's a long channel or a wide channel. But believe me, it broke down, went to a low, and then started a huge move up back on the 14th at about 2 o'clock in the afternoon, screamed up to higher highs yesterday, and then plunged, and then tried to rally. And then what happened on the 14th? Yes. And then today, overnight, with all the news, there's a conflagration between a Russian shooting down, was it an American drone? Oh, geez, just to top everything off. And then you get Swiss, what is it? Credit Suisse having just a really bad news overseas. And that affected everything. Now you can see we're challenging this blue line. I love to keep lines. I don't like messy charts, although it does look a little messy there. But I love to keep trend lines that are important at a certain stage in place. And look at this. If we're trying to break above this resistance level, if the E-mini can actually start to get to 39.15, 39.20 at some point today, that's going to be a huge relief. And one of the reasons why I said to subscribers to my opening call, we're going to take a position again, as we did yesterday. We made money on the upside of the 3 times long Dow. We still have a core position, I think, from the 44, 45 level from October, even though it shrinks a little bit because it gets smoothed out at the end of every day. We still have that, plus the diamonds. I said this is very important. There's a chance today that we could get the flip to the upside, even if it's just a relief rally, and we'll see what happens. So look at this. Here's this 1-minute chart of the E-mini. You made this beautiful cup formation or V-shaped formation, gone back to the high that was a failure pattern right here at that peak B minus at 10:08 this morning in the E-mini June contract of 3906.25. Where are we right now? We've gone from, I couldn't choose that as a midpoint. It was just too far. It said you'd have to wait too long. So I chose a particular candle. It's the alternative. So choose a particular candle. That said it should take me to, right there. It should take me to 1121. Plus I have the Chapman Wave inside wedge target resistance line right there as the coincidental. This is the co-point that matches the horizontal to the diagonal. And now we're going to see maybe a pullback at a peak F, but it was nice that you broke away from that low that didn't test the left side low of earlier on, which is way back right there at about 9 this morning at about 38.72. All right, so with that said, a couple of questions are coming that I want to get. In fact, for those of you in the Den or even in the Tiger YouTube, yes, if you want to just post, I'll do what Steve does if I can. Obviously, I'll do it in a different way. But you are getting that pullback here, that peak F, as it hit that left side high. There's not much to do. We're just going to wait to see what happens after 2 o'clock this afternoon. So question, Jamalaya wants to know about FAS. FAS is, here we go. This is in the financials. You have the XLF, which is the S&P Select Financial Spider Fund, down, made a new unrecovery low at 31.11, trading right now at 31.34. FAS, you'll see, is the exact opposite. It's gone to a leg E, and that is is that 3 times? I think it's 3 times. Is that what it says? Yeah, 3 times short the FAZ, the XLF. If I look at this on a purely empiric way, I'm just looking at the price. I don't know what it is. I'm looking at it as if to say, all right, all the action that you're doing right now, how would I assess it? I can do all sorts of other things. In fact, let me do this. I'll go to my right here. I haven't looked at it for a little while. So here is the, here we go, FAS. I'm looking at this. It's got Chapman Wave automated support and resistance lines. You can see on the daily, we surpassed the resistance lines of 20.11. There was nothing in the weekly, nothing in the 120-minute chart. What is the 10-minute chart saying? 10-minute chart is saying 24.88. And the high today is so far 25.09. So you see this little doji candle here? I'd be looking at that. And if someone said to me, I'm in FAS, I've had a spectacular move, what would you do next? I would say in the spectrum of things, it looks to me, especially based on the weekly chart, not the monthly. The monthly chart just stuck in a range, so between 36 and 20 and 14, you can't go by that. Based on everything I'm looking at, I'd want to see where the MACD stochastic is, all that sort of thing. And where, look, if the stochastic is flat at 88%, you see what happens when it pops over 80% and then fails, the price fails. When it is, every technical analyst book that I've read says stochastic over 80% is overbought and under 20% is oversold. And I say, wow, that's the exact opposite. If you are long, over 80% is what you want to see. That's when you get your best accelerations to the upside. Under 20%, that's where you get your best accelerations to the downside. So the word oversold means it's implying that it should undersold, it should correct itself. There's no guarantee. It's just telling you in a very blatant way and very bluntly that at 88%, the stochastic's acting really well. Okay? So all I can say is that if this is the day is young, we're not even 2 hours into the day, and the Dow's already back down to the down 500s area. The S&P's down 55. So there's just so many cross currents. You don't have to anticipate a major low at any point right now. I'm not expecting to see that just unfold out of the blue. There are just too many questions out there. And not only that, there are too many financial questions. So with that said, let me just say that the FAS, I would do it purely on money management basis. Jamala, if you are long, I would take a little bit off as money management. I would also have a stop on some position at about the high of yesterday, which was 23.57. I'd put it just in under that. I'd put it at about maybe just under 23. as just a tiny stop on some part of the position, saying, you know what, we're in an area where anything can happen. You can get sudden spikes in the XLF because of sudden good news to the upside, which will really bring the fares, the 3 times short, down very quickly. Then that money that you just took off, I would not say I'm done with the fares. I'd say let's see how it handles the 200-period moving average of 20. The 9-period moving average is 21.16, and the 200 is at 20.33, which is close to the 40. That whole area. See how any pullback how that handles, because you might want to put that money back. But if you're in a core position from lower down, I would only be taking off parts as money management right now. I don't get anything that says, even though it's a doji with a leg, potential with a gap up PE and a should pull back, should doesn't mean does have to. I'll be back. Dow's down.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So for subscribers to my opening call, I had from last night, I had a list of about 8 or 10 stocks that had done really well in this environment over the last couple of days. But I was really afraid to do anything with any of them on a day like this, because what I had said, what I noted to my subscribers is when you have so many areas that were working before start to fail, and I was mentioning this earlier in my show in the Tiger Technicians Hour at 10 to 11 every day Eastern Time. We got into that, we got out of it. Now look at this Global X US Infrastructure Development ETF. Look at this move from the 30 area down to 27 to the 200 period moving average in a straight line down. And look at it's a peak F in the weekly chart. The monthly chart is still holding pretty okay, but I had a question earlier on about deer. Well, look at deer. It's done this double top in the 446 area going from back April or May of last year, retest in November, and then it fails, but it isn't breaking down, but it doesn't look great right now. So this is part of the whole thing of the infrastructure. Caterpillar, look at that breakdown. Peak D in the monthly chart, going under the 200 period moving average. I don't want to get in the way of I don't want my thinking to be, you want to be buying on this dip. I want to be buying very selectively. The charts that I looked at yesterday, some are holding really well even under these constraints. So that just says to me, because you didn't, and I normally do this, I didn't do it this time, it's just embarrassing. The moment that 9-period moving average crossed negative right there is where, after a peak D in the Chapman wave, is usually where we grab either a DOG one-to-one short or maybe something more aggressive like the SDOW. I didn't do that, and then we actually used the UDOW for a fabulous rally right there to the high that was a Monday a week ago, I think it was at 33,572 with a doji candle. And that doji candle the next day said, we're going to be going down to test at least the 200-period moving average of 32,900. But if we break that, you can make a dreaded H, that H pattern where you take out the left side low after a peak A or B that fails. And that was 32,500. So at this particular point, the weekly inside track, what was the repellent zone, has become the propellant zone. If there is a close under let's give it a room, 31,200 is the number I'd look at, but actually under the pink line, I'd even go below that, and I'd say, if there is a close, let's go right there. Yeah, under 31,100, 31,000. Then everything I was talking about, and I did that in my show. I haven't done it have I done this in Steve's show? All right, let me just show you. I don't know if I did it, but I'll do it again. This is what's called the Chapman Wave Dark News Cloud Cover. Whenever there's something out there that has the potential to knock the market down, I always like to make a note of it to say, hey, there's a dark news cloud cover sitting out there. How does the market handle this? And because of that, my thinking has been for some time that the low of October, which we are still long from the low of October, I don't know how long that can last, but anyway, we are, and says that, I don't want to go into the whole thing, you can hear it on my show, I'll do it maybe Friday, Technical Friday, I'll do it, where I talk about the internal low, the residual low, the internal high, the residual high, and I see this long sideways rectangle, which started off as a large rectangle, and I have a whole theory on rectangles. What happens in the narrow one when the midpoint line gets breached? Well, we are close to a one-to-one to the downside. You see the long-term trend line? There was the resistance. We saw that in the weekly. Now it's support. We're testing it as I speak. This is very important. And I've been saying to subscribers that I look at, for years and years, decades, I've always thought of the market when I get this, what I call the internal low and a residual low, meaning the internal low is like the earthquake. And then the residual low can take you to a lower low, or it can take you to a higher low, or it could just fade away. But the residual low is the emotional low. The internal low is where all the technicals are just horrible. By the time the residual low comes in, most of the damage has been done and it's ready to move up. That's the same thing on the upside. We made an internal high right here. That was the high of December. And then we went to, wait a minute, why is that? December 34,007. Oh, that's the most recent low, of course. That was the internal low. And I put in 11/11/22 in November. I put dark news cloud cover, and I drew in a small, I've made it a bigger rectangle, but now we're under it. So now I have to start looking for internal lows and residual lows. But my thinking has been that this is the major earthquake, and now we're going to see all these subsidiary residual lows, and that my thinking is that we should not take out the low of October. I don't know if that's going to happen. That's my thinking. But in the meantime, for subscribers, we've already raised a lot of cash. We're looking to get into certain positions under certain conditions. So going back to the XLF, I'm just going to, I did that again. Let me just go undo and then do that. And now I can do this chart right here. Going back to the XLF, the reason why this is looking to me like it's going to run longer, and that any low we see right now will have to be tested if we do see a low, is because you've got so much going on. Look, the IAI, which is the iShares broker and dealer and security ETF, we are long from 45 back in 2020 in March. We've added other positions in and out occasionally, but we haven't added another position to put in for a while. And I'm just waiting, because this is a clue. It was acting so well going to the high just 5 weeks ago, saying, hey, this market's holding well. Now it's doing the exact opposite in Schwab. And now I'll talk about Schwab. Schwab, yesterday, 3 days ago, did something very unusual. Well, unusual for me because I'm not always following it. But it made it what I call a Chapman wave. Let me expand this. A Chapman wave price volume climax low. And that low at 40, with the round number to top it off, says that 45 low on the 13th of March, and it sounds impossible, I don't know if it's going to work or not, should not be taken out for 28 days if we rally nicely off the low that bar. And we have so far. So all I can say is you need other techniques to tell you how high it'll go, but all it says, it shouldn't take out the 45 low for at least 28 days. If it holds for 28 days, this is trading days, then it could go for 56. That would be a really big deal, because Schwab, for those of us, we were watching it, and it acted so badly when the general market rallied. I said, there's something wrong with this picture. There's something wrong with the XLF. The same thing was acting so badly. Now we know why. And therefore, for the question about FAS, that's the reason why I don't think it's all over. We've got a core position. I would hold it. But money management says take a little bit off. I'll be back. Dow's down 544. S&P's down 58. Basil Chapman sitting in for Steve Rhodes. I usually do 10 to 11.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. Basil Chapman sitting in for Steve Rhodes Hour, and what I'm looking at here, so Jamalai, I'm sorry, I didn't see the fullness of your question. So the actual question was, Mr. Chapman, in reviewing FAS, does your chart indicate a drive to resistance of 29? I forgot about that. Mr. Rhodes, 9 candles up, more smoldering ashes in banking. So the answer to that is yes and maybe. So, or it should be maybe and yes. So you see this little doji candle, day is young, anything can happen. But you see the way that the stochastic has the swoop to the upside. The stronger the swoop with the 9-period exponential moving average and the MACD, the greater the chance that it runs out of energy quicker. I like it when it's just a slow move, when the MACD is actually running already and then the price gets going. Then the stochastic has already made a low and it continues to move higher. But the big swoop says it's the suddenness that you've got to be a little bit careful of. And that just says to me, because it's the I'd rather do this on the XLF because that's trading at the price that it is at. The 3 times gets smoothed out in the evening. So let me just show you what I'm looking at here. If you're looking at that monthly chart, and I do say, I'll just do this because so many of you I know use Fibonacci numbers. I also, but I don't keep them in place. I just use them for what I need. So look at this. The FAS had a rally of, I can never read these because it just gets squashed in there. So let me just move this to the side. Just keep it going. Just move it all the way there. So it went to the 618. And then it pulled back. Now, almost, I would say almost exactly. There's no such thing as almost exactly. It's either exact or it's not. But it's really close. In fact, it's so close that I can say it is right on it. So 3720 was the S&P Select Financial Spider Fund. The XLF high on that rally in February to 37.11. So it missed it by 9 cents. And now it's pulling back. Up. I'm going to make that even better because it wasn't correct. It should have been right to there. So what did it miss it by? Yeah, so it missed it by, about 20 cents or so. So now what I'm looking at is this arch formation right here, the dreaded H, the one that I was talking about, has had one that went under it. This is the one that is so important because very often when you get the very sharp pullback and then you get a bounce and then the next low is just a little bit lower, you get a pretty decent bounce. That's what you get. And what it's done is it's used up a tremendous amount of downside energy. So especially when you look at this, already gone to a peak C rather than fail at a peak B. So that says there is, for me, a good chance that the low that was made of 29.59 the week of October the 14th in the XLF, at this particular stage, before we get there, if we're going to get there, there could be a pretty decent rally. And if there is, I'm going to draw this in because that's what I would anticipate. If there's a rally coming soon, this is going to give you just the pattern. It doesn't give you the time sequence exactly, because it could do it all in a very quick moment in 3. So a bounce and then a retest of the low. So that's what I'm looking at. That's the reason why I said right here, just in terms of money management, to keep your core position. Okay, did that, and I think I covered it as much as I could. Question came in. So Shazam wants to know, is the market going to succeed in telling us the Fed will not raise? So here are the things that I'm looking at. First of all, Powell knows the markets back and forth. He's been in the trenches. It's not like it's all foreign to him. I'm not sure Bernanke was ever quite in the trenches in the same way. So Powell's been there. He's as far as I can tell, could be wrong, he's a marketeer. So a marketeer, not yet mark to market, but a marketeer. And that just says to me that within the context of what he looks at, believe me, I wouldn't be surprised if every single day he's looking at the market and shaking his head and saying, ugh, or yes, or ugh. And more uhs than yes, because it is just giving him so many differing opinions that, in essence, what he has to do is bypass, either he's going to bypass everything that he's looking at now in market-wise and say, our charter is to get to a 2% employment rate. But at the same time, I am looking at is that an inflationary rate? 2% inflationary rate. He might get to the 2%. He doesn't want 2%. He wants more than that. The 2%. And as a result, I guess he's saying to himself, the market has just done a whole bunch of things for me, but I don't have the data yet, because the Fed has no choice but to be data dependent, but the data is late. By its very nature, the data is a look-back period. They can't be looking forward because they don't know the data looking forward. They can project out. That's not what they're allowed to do. So if he's looking backwards, he's always going to be late. That's why the Fed is always late. Now, within that context, within the spectrum of what should the Fed do, look at this. The Fed is getting TNX.X. The Fed is getting, the market has done a chunk for it. It's got the rates much higher, up into the almost 4.1 area for the 10-year. It's now at 3.4. It actually hit 3.38 this morning. And yet, the data I don't know what came out this morning, but it was data that said whatever it is less than it was in an inflationary aspect, was less than it had been. Well, if you look at it that way, I would not be surprised if the back of my mind thinking, which I've articulated for my subscribers, saying that it's going to be, everything comes together for one crunch where, wasn't it 2 quarters of negative earnings creates a recession? Isn't it? But we've had more than that. So I don't know what they've changed the rules. Of course, every administration likes to change the rules. Maybe they've changed the rules. But that's how it used to be. But if you're looking at what's happened in the market, I think that with the layoffs, with the bank layoffs, with the bank fears, with IPO fears, with what's going on, I think the employment aspect is going to be a big change over the next 2 months or so. I think there are going to be a lot of people being laid off, or people just not working anymore. And that's kind of being written into the market. And that's why I say, I think we're already, in many ways, we're already there. We're just waiting for the culmination. And that's usually a market whopper of a sell-off that turns around with a nice V-shaped pattern. We haven't had that for a long time. I'll be back in a moment. Basil Chapman sitting for Steve Rhodes, and we'll look at the IYT, which is the Transportation Index.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hello, back. Basil sitting in for Steve this hour, and there was some hitch, and I think Steve couldn't record his show at 8 this morning to be replayed, so I'm here. So just in this final segment, let me do a couple of things. So the IYT, the transportation average, is not giving any signals. A good call here by Duncan Steve says 11:45. There should be another time reversal. And lo and behold, 11:45 was actually, it was 11:47. There was. And now we've made this double top. And if you look at the vertical indicator right here, look, at this time frame right there, at about 11:20 with the high that was made in the 1-minute chart and the 11:47, I think, high, look, the technicals are much weaker. So it says it's having trouble. So now it's stuck in this rectangle formation. If it slides under 38.87, that's a problem. We could even see another slide all the way down to the 38.70. So just this is not a time to be a hero. Just got to be very careful. And you can see in the 10-minute chart, this thick blue horizontal line says until the S&P is able to clear 39.03, I'd actually say 39.10, and really hold that for about 35 to 45 minutes, it's very vulnerable. So with that said, be very careful out there. Got a great program for the rest of the day. Don't forget, we start off at 9 with Tommy doing the morning market kickoff. Then we got my show at 10, Steve's show at 11, and at 12 we've got Thinkorswim. Then we've got Dave White. Then we've got Larry Pesavento, and Tom O'Brien wraps it up. Great program. And one of the things we wanted to do just as we were about to go out is say, check out my opening call, my daily newsletters. It goes out every morning between 8 and 8:30, or it could be even earlier sometimes. And yes, I'll be here tomorrow at 10 o'clock. Have a great rest of the day. Oh, did I pick the music? That's a little unusual. Yeah, Credit Suisse, let me just do this as we're wrapping up, has come back a little bit from, and thanks GT for those shorts on the on Baba. Yeah, I guess that must be working as well. So Credit Suisse is off the low, 175. It's at 199. Just the other day it was in the threes. This is not good. Have a wonderful rest of the day. See you tomorrow. Thank you for being here.